The AI revolution is here. What's the pick and shovel? Is there any way to be part of the AI revolution without risking too much? Is there a safe compounder that we can invest in that can have more than 50% profitability over the next decade, more than 15% growth, has multiple defendable moats, and ideally is an essential pick and shovel? Well, maybe Arista Networks is the answer to our questions. Let's find out, guys. Let's go. Use case, then profitability, growth. We want both profitability and growth to be 15%, otherwise we don't talk about them on the show. Moats, is it defendable? SWOT analysis, risks, opportunities. What's our investment thesis? Do we own it? And what's the valuation? Let's go. Use case. Meta is a client. Microsoft is a client. Let's double click into Microsoft. Microsoft used Arista to scale its cloud business into the world's number 2. It used Arista to scale hundreds of thousands of physical servers and millions of virtual machines in its data centers to maintain feature consistency and a stable software without forklift upgrades, and it built an extremely large and resilient networks with the least number of switching tiers. You remember, guys, from our systems workshop, the more parts you have in a system, the more breaks. So if you have the least number of parts, that's the smartest system to design. So the least number of switching tiers is the optimum number to design for you. What was the ROI? Dramatic decrease in the costs of operating and deploying, self-healing resiliency, software stability, zero-touch operations with real-time telemetry. So now we know what they do, right? It's the switches in the data centers of the AI giants. Now, like Meta, Microsoft, as just 2 examples. Of course, when we have these large clients, we have to look for concentration risk. We will check that later. Is it profitable at 27.6%? It's incredibly profitable. We want 15%, slightly above over a decade. Arista has that. It's also trending slightly up, which is amazing. If it just can keep what it's doing, this is a winner. And that's what you want. Nothing where you bet on something that hopefully later on happens. But if this just keeps doing what it's doing, it's essential. Sprint Club members entered Arista at a great price because we have each other's back. We do this in real time. We tell each other when we're buying something. We challenge each other. We give each other the best research, the best tools to evaluate, and we're constantly learning and pushing forward. So if you want investors that are sharp and that can be your sparring partner, make sure use the free trial 7 days to join the Sprint Club. It's at strategysprints.com. We want companies to grow above 15%. Otherwise, they don't pass our screener, not even for the watch list. This company has grown at 27%. And again, the trend is up, which is incredible. How can you grow 27% and be in an uptrend? You will see in a second. We have multiple modes. No network effects, because with network effect, I've seen analysts saying it has network effects. We have to be precise. A network effect only happens when you add one user and that creates more value for the next user. This is not the case for most companies. It's not the case with Arista. Just because you build switches doesn't mean that you add one switching client, for example, Microsoft, and now you're creating more value for Meta. Absolutely not. Only maybe if your scale effects increase your unit economics, decrease your costs. So now They might save some costs, but that's a different dynamic. That's a scale dynamic. We will look at that later. So no network effects here. Loyalty, yes, this is the strongest one, because once an enterprise deploys Arista's EOS across their data centers, migration costs are massive. The single binary image means customers avoid forklift upgrades, but become deeply embedded in its architecture. So loyalty, yes. Then there is IP, but it's a technical IP. It's not that highly defendable, but it's strong. There are barriers to enter because it's really tough to land a large account. Imagine you want to land Microsoft as a client. Well, good luck. It took them 18 months to land them. So from now, you will need 18 months if you land them. So there is a barrier to large accounts just automatically. And then operation scale. It's not network effects, but it's scale effects. If you just have volume, you could go down with the costs, and you might go down with the prices if you decide to do so, which most of the time is not a great idea, but sometimes it's a great idea. So with the leadership position, you can use scale effects, both for defending, but also for bringing your customers in even more switching costs, because they don't want to lose those effects that are positive for them, because they're having less costs. Strengths, massive switching costs mode that we just described, deep partnerships with the giants in the field, and the more data centers scale and they're scaling, the more essential Arista Networks becomes. Weaknesses, it's dangerous to be just with a few large clients, and 35% are these tech giants. That's dangerous. You are too concentrated. You need to diversify. Opportunities. AI networking booms, and with it, everything around it, including switchings in data centers. Threats. White box commoditization of networking hardware, industry consolidation creating stronger competitors, Cisco, Broadcom, VMware. But we have looked at it. I wrote a deep dive article comparing the market shares of Cisco and Broadcom versus Arista Networks. Nothing that I am scared about. Arista is winning on all cylinders. It's firing on all cylinders, winning in every metric, specifically market shares. So while it's a threat and we have to look at it, and I will be monitoring it, there is nothing to be worried about right now. My investment thesis, remember, if you understand a company, then you can put your thesis in one sentence. So before you buy anything, write it down in one sentence. To me, Arista is the pick and shovel play on the AI revolution. It is essential for high-speed data center networking. That's it. And the more data centers grow, the more essential it becomes. So to me, it was a no-brainer to wait for the right price and enter. When was the right price? It was in the 70s. We're now in the 99. Our DCF, discounted cash flow analysis, says it's worth right now 82 in June 2025. But the DCF is always a very subjective matter. What is a fair value? There is nothing like a fair value. Yes, you can calculate the discounted cash flows and then come up with a number, but that's not a hard science, right? The fundamentals are important, and of course, try to enter at the margin of safeties. So it is in my portfolio. We entered in the 60s. What I would do now is put this on your watch list and wait for an entry point that's below 80, and then be aggressive and quick, because these high quality companies, they don't stay long in the dip. Now, Sprint Club members get real-time trade alerts. I write in the exact moment, in the same hour that I'm buying. I let the members know because I have it on my phone, and it's my favorite thing. It's the only thing except the Satguru app that can ping me. And so I'm getting pinged by you guys, and I love it. I love to answer your question around investing, trading, marketing and sales, scaling companies, all the business owner questions. are my questions. I love this. So keep rolling, everyone. If you're not in the Sprint Club, join. It's free for 7 days. Hang out with us, see the quality of people, the quality of the questions. And you might want to hang out with us. Keep rolling, everyone. See you on the other side.